Okay, good morning, guys. Can someone tell me if my video and sound are working? Anybody? Yes, all good. Okay, cool. All right. Well, I just decided to open this up because I'm sitting here anyway and give us a chance to talk. And something interesting might happen. There's no news this morning on the economic front. But you never know. This is the major stuff, and factory orders, that's no big deal. So that's where we are. And I don't have any sort of agenda. I'm not planning on talking about any specific subjects. That's cool, John. If you guys want to just type questions in the chat box, I'll answer them as we go, if there are any. I can also unmute people, but that's a little bit complicated with all of my screens because the grid of all of you disappears and I have to go hunt for it. So let's try to work from chat to start with. Anywho, I'll talk more about what I'm looking at here when we do the 6 a.m., which is the real session. Again, I just thought it would be fun to open this up. This time of day can be interesting, particularly on a Monday, because everyone kind of doesn't really know what's going on and is collecting information. Michael, I think it was you that asked me a question in Slack. Let's see if that was you. Hold on a second. Yeah, okay, you asked me a question about that I tend to work toward going back toward balancing where the most volume was traded, this question here. Yes and no, that's part of the concept, but it's really more context dependent. And just because you asked that and I was staring at it a minute ago, I figured I'd bring up an example. Here's the ES volume profile, and there's lots of high volume areas, but it's so early in the morning that they're not all that significant yet. So, would I be trying to trade toward this POC here right now? No. Or the blue is the volume weighted moving average, the VWAP. Again, not significant enough yet because, we've got the overnight session. There's only 150,000 contracts trading. That could be 10% of a normal day. So it's just nobody is showing their hand yet, which is why in the world of having a process, which all of you should, and nearly all of you don't, which is why you're not consistently making money. That's why this item is here, collect info. I've done all this already well, this I do every loop of every trade, but I've decided I'm humble for the morning. I've reset my head, reasonably confident, given my personal situation. And so the context here is, we're up and I don't know much yet. So that's why that's there. That's a really good reminder that once you get into the day, take a look at the delta and what it's doing to the price, and then next step, what's going on. And so that's a real easy calculus to do right now. There's my 30-second chart. The delta is a little bit on the sell side, but not really. And again, I'm going to go over all this in the main session at 6. I'm just literally babbling and you guys can just listen. So what do we see here? Net, the delta is pretty much flat. We've created this big bubble up here. These tend to fill in, but when is the question? So there's literally nothing to look at, but to make any significance about this high volume node or this one at this time of the morning would be trying to make your charts tell you what you want them to see instead of just having them tell you what's there. I hope that made sense, Michael. A lot of you guys really want to make things mechanical and you really want to have step 1, step 2, step 3. And so I would suggest to you that you implement that in your process, that mechanicalness, and that you learn to try to avoid it in your setups. And that's where the art comes in, the art of understanding that it's not always step 1, step 2. And I know you kind of have to get there to the beginning. I'm referring to some of the conversation about open 5 that was going on in here. Like what Samer was doing. You're always doing that, Samer, and that's cool. That's how it works in your head. But leave room for the art. Leave room for the art. Because remember, when this is going on here, when the auction's going on here, everybody's trying to be mechanical, but the net result of all of their activities together is purely emotional. It's not mechanical at all. If everything were mechanical and can be predicted in advance, we would have no chance. No, I wouldn't look at it that way, Simon. I'd look at it the other way around. If everything were mechanical and predictable, all the AIs could just trade with each other. We could all have them and they'd all work. But that's the whole point. Markets are zero-sum games in the futures. So in order for me to make $1, someone else has to lose $1. So by definition, right there, you math freaks, because I'm one of you. And again, anything I say is open to challenge. Feel free to disagree with me, but you better bring your best stuff because I know mine. In a zero-sum game, it is impossible to use a mechanical system because by definition, one has to work and one has to fail. Therefore, mechanical interpretation of futures movement is incorrect because that's not how it works. That's how the profits get distributed. But the price movement is not that way. It's ebb and flow, it's rhythm, it's cyclical. So you can't look at it in terms of a linear sequence. Okay, cool, you've got Jigsaw running. Yeah, have fun. Jigsaw is a nightmare to get configured the way you like it. Like if people keep asking me if I can share this configuration, turns out with the plugin in 7, I cannot share it. I can do it in DayTrader, and when I get all my settings migrated over there next month, I will share my templates. But in the meantime, there's a lot to do in Jigsaw. I would not recommend using the default templates because they show you way more than you need. You know, all the adding and pulling and all that stuff. And personally, I just don't find any of that edge producing, particularly for rookies. It's overwhelming. So now working on an office. Okay. Sounds good, John. You're the teacher in Florida, right? Is that the John? Yes, okay. All right, Steve says, I wonder how much of what would have to happen to get you interested. Okay, what specifically, Steve? I'm gonna unmute you so you can just talk because it'll be easier with a question like this. Let me find you. Where are you? There you are. Okay, Steve, you may speak, I think. Wait, no, hold on. Okay, it's not letting me unmute you. Darn. There we go.
Can you hear me now?
Yeah, go ahead.
Hey, yeah, like in the mornings, I just have a really hard time knowing when I should be out, and then what's going to start happening when, yeah, I should start getting interested now. Because sometimes the volume will pick up and then it just goes back down, and I just have a really hard time this time of day.
Okay. What did you do for a living when you were a working person?
I was a teacher, and then I was a network administrator.
Okay, so you have a technical background. What subject did you teach?
Science.
Science, okay. All right, so you're looking for rules here.
Yeah, I guess so.
Gotcha. Okay.
Yeah.
So what I'm trying to explain, and that's what I was talking about with the high volume nodes and everything, is that the only way to answer your question and the only way you'll ever get what you're trying to understand and get is literally by sitting here and just experiencing it over time. So for example, we have a ledge right here. This is a ledge. It's all-time highs, and we have not been above that. So if we grab the, let's see, hang on. And some of this is prep, but okay. So there's the ES Renko chart. And remember, Renko's measure trends, and that's, pretty definitive uptrend there. And, here's the range, and it's telling the same story. There's just no data up here. We don't have any experience. There's no past trading. So that's a perfect example, Steve, of an opportunity to practice this behavior of just letting the market tell you. If we get up to this top of this ledge, remember what I've said about ledges. Overwhelmingly, 99.9% of the time, that will break to the upside. So, all the step one, step two, step three, science teachers are like, cool. So, what's the signal and then what's the confirmation?
Yeah.
And, no, that's the whole point. You can't have that because all we know up here is that there's a whole lot of people going to try to sell the highs. And then there's some really massive players that are going to come in and try to run the stops, because if you're an algo, 1,000 lot trader, you get 2 ticks out of that and you just made your month. So literally, if that guy can, buy 75 and sell quarter, he's done for the year. Think about it.
Yeah.
So there's so many factors going on up here at once. And quite frankly, the answer to your question is just watch and see who wins. And it might be one guy wins for a second and then another guy wins, which is why you'll see it go one way and the other way. You can't infer anything scientific there because there isn't anything. It's if you think of a whole group of bulls, literally the animal bulls, okay, and they're all banging their heads into each other, and we're just waiting to see, who's still standing. And if a whole lot of bulls, or, this isn't bulls and bears, but if they all get on one side of the trade, then it will be a self-fulfilling prophecy. And those of you trying to figure, well, how far will it go, is I'm going to calculate, 3 times the this to that to get a target. Again, you're fooling yourselves. It just doesn't work like that. That back in the days of technical analysis was a way of building a system that would allow you to be non-emotional. And in today's market, with today's level of information, that model doesn't work anymore. I see all these people posting, particularly in the Top Step group, it's just nonstop over there. They're constantly posting, well, I'm building an automated trading system to do this and that, and here's the results from last year. And you know what? More power to it, you guys. But those things only work on one setup because by definition, that's what they are. So you still have to have a really, really intelligent way of switching between them, which is again called discretion, or you have to just get out of that mentality that there's a way to mechanically make money here in a system that is just constantly gaming fear and greed. And you have to go back to saying, what's the context? Given that context and giving the order flow, who's likely to win at any given second right now? And then that's what you have to play. So the more time you sit and watch it, the more your brain learns to do that. And that's why I've got you guys doing the LRCs. This LRC is being really, really informative right now. Most of you don't know what it says yet. And if you learn to read on the dome, you don't need this. But in a nutshell, the larger one has defined the range. It's really clear, 77 to 76 here. Well, we can see that's our bulge. And the top of that, 78 up here, that's right on the POC. We're not seeing this kind of other half of the profile in the price action if we look at this one, but if we look at this one, we do. That's why I use the shorter one within the longer one. We're seeing that the bias in here at the moment is to the upside, and the volume is much stronger on the prods up than it is down. So this range is defined, and the immediate bias is to try to test the top of it. But that's logical too. We know that. We're up at the highs. We're up what? How many are it? I don't know, 14 points. So, until we're up about 30, we're not even starting to get overcooked. So never try to predict days that are near highs that have ledges at the top of a volume profile. You just have to go with whatever happens. Okay?
All right, thanks.
Did that, I know that was a long answer, but did that help at all?
Yeah, it does. And I'm getting better at staying out. I'm happy about that.
Okay. Here's your psychology. Your default position should always be flat, not in a trade.
Right.
And then you should look at a trade and say, okay, are the odds good here for my setup? And then the next thing in your head should certainly be, and if I take this trade, why is the guy on the other side of it taking it? I'm shorting. Why is he long? What's he thinking? Okay. That's right. Always the process I check myself with.
Hey, that helps. Thanks.
All right. I'm going to remute you. And okay, do we have any other immediate questions? Just throw them out on the chat, and if I need to unmute you, I will. This is interesting here. This is one of the reasons I run blocks versus the whole tape. And you see it shows both, but this will go by too fast. That was a pretty significant buy for this time of the day. I don't know what he's doing, but that's him right there. And you can see that was at a point on the tape that could start rolling us over into the other half of this, As the volume goes down here and we get away from high volume areas, by definition, that's telling us, and I say that a lot, but that's an important term because the whole idea of the volume profile is telling you that there's just less interest up here. So if we start coming up here and there is interest, like, let's say you see that, only you see it up here in a bunch of them, that's a really good sign that, the action and the momentum are pushing that way. That doesn't mean this guy showing 350 here really isn't selling 3,500 and he won't just slam us down. Or he could be a total fake, or it could be 1,000 guys, with a one lot. We don't know any of that. And all these furus that are telling you that there are indicators or, iceberg things or whatever that will tell you what's going on under the covers there, that's total nonsense. It'll just give you more data, and more data is sometimes good, sometimes bad. But don't get the idea that there's a mechanical way to look at that kind of behavior, like if somebody displays a really big size and understand what's happening. You can't. There's just too many ways that can come out. I hope that makes sense, because a lot of you are just, there are platforms, that really try to give you detail there about what that is, and indicators that try to sell you that. And I'm not saying that the information they're providing is wrong. I'm just saying it's so much information that I question how a trader can use that in a decision process quickly enough to be of any value. So that, when I see, I'm going to just go back here for a second. When I see, where was that? Hold on. I remember what conversation that was in. There was a couple of other, stuff like this. A lot of people have footprints like this with a whole lot of data about what happened at every price level. And down on the bottom, there's all kinds of fancy statistical summaries with, the standard deviation of the deltas and all kinds of stuff. And my point is just that, you can overwhelm yourself with information. And the key to developing a good process like this that works for you is to really whittle it down to what you really need to be looking at, and just eliminate everything else. It doesn't mean that data isn't useful, but if it's not part of your instantaneous decision process, then you really ought to stay away from it. Okay, this is interesting. So there's that guy I mentioned, and now look at all the other little kind of incremental buying going on above him. By the way, that could be him too, or could just be other people that saw what I saw and said, all right, somebody has staked a position here at 77.5. So as long as that continues to be defended, then the bias is in this direction. So here's a good example of how I reset stuff. A bunch of you have asked me that. So I'm watching this node right here with this big, that was like 2-to-1, 3-to-1 on the buy side, and that was most of it. So I want to see, going this direction, if that little node gets defended, because that's really the bottom of the volume area there. That's how my reminders work, by the way. This is telling me to check for 5:30 news in my time frame. A lot of the announcements come out, like tomorrow there's import and exports and the trade balance, and today there's nothing, and none of that is really very valuable. So that's why I use those reminders. That was a good example. It came up just in time. Okay. So you guys understand what I'm saying here? Somebody's more or less staked out a little position here, and some people have kind of joined in, or maybe it's the same person. And so from that point forward, watching that is really a good idea. And there's a way in Jigsaw, by the way, I have it turned off, but you can put the alert column here, which it gives you a little box where you can put like check marks or your own comments. And I found that useful when I was learning to use it. I don't use it anymore, but for those of you learning Jigsaw, let me just throw it on here real quick. It's called the alert column, and now it's really huge, but it basically allows you to, like I could mark that area, and so that can be useful. And you can also make it a lot smaller. I'm just showing you that it's there. I don't want to redo my whole layout here. So that's a good way to learn how to kind of identify these things to yourself. And you can put it anywhere you want. It just by default comes up on the right. Okay, so let's see, it's 5:20. So what I'm gonna do here with this little impromptu chat session, not the 6 o'clock one, we're gonna go about another, 15 minutes. And again, this was just free chat, talking, telling you what I'm looking at. I'm still having coffee, so I'm not even awake yet. But, oh, see, I just reset that completely again. And the reason I did that is I want to see from the POC, and remember, we still have this guy down here. that one that I was watching. I want to see now what the net result is from that point. And this is the net delta since I just did that. So here, I'm going to do it again. And let's reset everybody. So this guy's now fully a point into this trade. He may be out of it, who knows. But from the point that there was buying interest there at 77.5, we now are a full handle away from that, and we still have some buying energy. So this is telling me that there's buying bias going into the open. And that looks like this on the LRC. See, the smaller one is accelerating up. Most of the volume probes are fairly significantly larger than the pullbacks. We can see that the delta bars are overwhelmingly on the buy side. That's consistent with what we're seeing on the tape. And it picked up a little bit right at that point where that guy got long down there. That could be a result of him. So you see how the linear regression channels, they're not trends. Don't think of them that way. They're just telling me the kind of shifting range bias at any given second. And they go even faster over here on the NQ because I only use 10 ticks there. And you can see some pretty significant inflections if you watch those. So it's a good way to learn how to see that rhythm that shows up over there on the dome. Ooh, this is getting really interesting. So there's definitely a buy-side bias. And, you know, you could have just jumped in when that guy bought there. I sometimes do that just to see if he can get momentum going. And that would have been a nice little scalp for a couple of points. You guys seeing what I'm talking about here? You know, back with that guy with the 170 back there at 78.5. Are you following that? The logic of that? That's order flow right there. I am watching the tape. I'm seeing aggression. I'm seeing a buying bias. And, you know, how can you miss this? That's why I set this up this way. The little guys are buying and the big guys are pulling it up. We're lifting the ask and we're lifting the bid. And nobody, yeah, right there. We finally got a little bit of selling into it, but not much. So you guys following what I'm looking at here? Is this making sense? You know, please answer yes, no. I have no idea what you're talking about. Just, you know, tell me if this is logical. Okay, cool. I see lots of yeses. So that right there is oh, now see, now sellers are entering. Somebody committed. That could be that guy. He just took off, you know, half his trade. Who knows? But the point is, there's definitely a shift. If you just look at the color of the tape, you know, and by the way, these are jigsaws, so these are reversed. On a normal tape, these will come up green and red. Right now, it would be green because these are on the bid, and that's wrong. So you need to get a tape that understands bid and ask and not use, you know, like your Thinkorswim tape or whatever, because it will color these the wrong way. If you look at your tape settings in Jigsaw, it display up, down coloring, reverse, high, low. That is really important because we're seeing what's really happening and not the old conventional wisdom of it. Conventional wisdom used to be that if people are buying, we're going up. But really in order flow, buying means that trades are going by on this side, not this side. So I hope that makes sense, because that's just completely opposite of what you'll see in your quote unquote conventional trading software or from the Furus out on Twitter. By the way, they're in full blast this morning. It's hysterical. If you want to spot a Furu, just look for anybody talking about the join our private channel, you know, and there's a billion of them, particularly in ES. And they love to post their P&Ls, you know, and say, look, I'm up 75% over the last year. And most of these guys are just complete idiots. Pete's an interesting guy. I know him. He's a decent trader. He's not really a Furu. He runs the old conventional style group, but uses levels. And I don't think that's legit anymore. But anyway, this is a really fun thing if you want to just go through and just pick a Furu and open there, and you'll see chartprofit.com, 300, I don't know, 130 followers. And, you know, this guy's saying never try to predict what the stock market's going to do, and that's exactly what he's doing. So anyway, not to pick on that one guy, but that's a lesson about Furus. Okay, so what are we seeing now? Now, basically, probably the way I would interpret this is not selling at the highs, but just anybody that was long down here is probably taking profits, and maybe some people are starting to put on shorts with low risk. Still a little bit of ways away from the open, so I don't know that I would be thinking that yet. You were in the trade, bought it and sold. Good, Alessandro. Good for you. Is the current shift enough to get out? Oh, absolutely, Darren. If I was in that, I'd be gone here, because otherwise you're predicting a breakout. And if you're trading the morning order flow, You know, it was long at 77.5 and now it's exit. It's not short, it's exit long. It doesn't become a short until there's down momentum, which there isn't. So, and that's why you take profits. You might as well get out or take some risk off, take half profits. You know, I don't see it just plowing through here right now. The tape is just not saying that's going to happen. But what it is saying is going to happen is they're selling here and the sellers have not managed to push the price down much. So, you know, you see how this is really a ebb and flow kind of, you know, you really have to interpret what you're seeing. There's just no mechanical, logical indicator that's going to say, you know, go, stop, go, stop. You know, it's just not, that's not realistic. It really isn't. Okay. All you are watching is the fills on the bid versus the ask. Yes, we have absolutely no interest in what people say they're going to do, John. All we care about is what they're doing. You want to see the fills. Also, there's just this massive misconception. Is Maria here? Yes. Okay. There's a few of you that keep posting this over and over again, and I know where you're getting it, but I got to shake you. So if you're one of the people I'm talking to, I'm shaking you, okay? There is no difference between orders at the market and orders that are limit orders. Stop repeating that, everybody. Fills are not market orders. They're everything. So when I see current trades, those are not trades at the market. They're every trade that's going by there, and then the ones on the bid are every trade going by on the bid. So understanding whether trades are at the market or limit orders, again, is nonsense, meaningless. Totally meaningless. All we care about is where they're getting filled. Yes, it may be some guy filling limit orders and it could be somebody hitting the market. But again, it doesn't matter. It's just the net result of the action. And I see that a lot in comments, you know, that current trades are trades at the market and those aren't the limit orders. Nonsense. They're everything filling. If you just think about it, every trade that goes off is one of three things. It's either market orders that have matched, or it's a market order matching a limit order, or it's a limit order matching a market order. That's it. There's no other possibilities. So every time I see the Furus and the people that are learning order flow saying that those are market orders and that those are not the limit orders, I want to just shake them. So emphatically, guys, if you are using that language and you think that means something, you're reading it wrong. And I had a battle with somebody, I don't remember who it was, in my Facebook group about this. I ended up kicking the guy out because he just couldn't listen to the language, the English. Every order that fills in the market, by definition, is being matched to either a market order or a limit order. That's how the market works. So please drop this stuff that there's a distinction between trades that are filling at the limit and trades that are market orders, because there is none. That is total just misconception. And I'm emphatic about it, and I'm passionate about it because I see it over and over and over again, and I'm just like, guys, read what you're writing. You know, and I had a battle with somebody about this a few months ago. I don't know, you might have witnessed it, but it was epic. It's English. So it was pretty interesting. I'm just going to check and see if anything's going on here that I need to answer. No. Okay. Questions, comments before we'll go another 10 minutes or so. This is not going to be, I guess I'll record it and post it, but this is totally informal. So it's for people that weren't here. I know it's good to have a recording. By the way, see, we just busted out there. So interpreting that as a short would have been a real dangerous thing. And by the way, the natural thing to happen when we're doing this at all-time highs and busting is to go up. Trying to short this is really insane. And you could buy this here. I'm not going to do it. I generally stay away from this pre-open stuff just because it's more informative to watch it than to try to play it. But you can kind of see what's the bias now. Any questions? That doesn't mean you wouldn't sell into this, and you can kind of see when it starts happening, when it starts rolling over. Watch that. Watch that. Watch these 2 meters, and then just watch the tape, and you can kind of see the bias as it unfolds. Would I be long here? No. It's too hard. Somebody can come in and sell 2,000 and we're back at 79. The trick to this trade would have been long from 77.5 and just kind of, take half off when it paused. Okay, I was running late. All right, all you guys posting that you're late and whatnot, great. That's you talking to yourself, so that doesn't really tell me anything, um, nor the rest of the group. Just open five planned for, yes, it is, Bauer. When I post something in the Slack, I'm real clear about what it is, so just read what I post. Workshop announcements. This is what pre-open, pre-webinar chat, no agenda. This is just a chat. I will give a stream of consciousness as I get ready for the day, very informal. What I say I'm gonna do is what I will do. Okay, now, this is crazy, we're breaking out. Should you be long now? Unless you are already. If your fear of missing out here, you're nuts. What you should be doing is looking at this and saying, God, this is really informative because we're leaving this high volume node on low volume. That doesn't mean that we're not going to continue, but that's what I remember what I said, that 99.9% of ledges break out. It did, so the way to play that would have been down there, along with that guy who got long at, he may be the guy that pushed this, who knows, that one that I showed you at 78.5 or 77.5 rather. But don't chase this. Don't try to get long in here. If you are, ride it up, but protect your profits. Always take profits. Fear of missing out up here is just lunacy, because this kind of behavior is going to set up the short of the century back to this high volume node at some point. So that's how you should be thinking. That's your collect information. That's what I mean when I say this, collect info. Watch the order flow and learn from it. Don't just be totally focused on getting in and out of trades. There'll be plenty of time to do that. That's why this is the pre-open. Okay, any last questions on any of this? And I'm going to go ahead and wrap it up in 5 minutes and get ready for the other session, which will start at 6. You guys see what I'm saying up here? That it's just, you could have jumped in as this started, but because you don't really have any idea what the bias is yet, and you don't have enough information, the volume isn't high enough. I mean, 168,000 is nothing. So you just could get caught up here. And remember, your default, at least mine is, my default position is flat. I don't want to be in the market just to be in the market. I want to be in the market when I can make money. And that's why my win-loss is so good. And my MAE, my maximum adverse exposure, is so low. I show that statistic when I post those summaries. It's like that because I don't just willy-nilly chase momentum, particularly in the pre-market. During the day, I'd be much more likely to hop in on that momentum than I would be here. Okay, Sommer, so when you see the bid being hit hard without pushing prices down, okay, I assume absorption and prices reversing up. Okay, I know you're trying to use order flow terms. Yes, no. Absorption is a term I use when the market is open and we're churning. I don't use it in the pre-market like this. It's not absorption. It's just the bulls and the bears are knocking heads, and one of them decided to get out of the way or join the other side. You can't interpret that much about the price level, which is what the word absorption infers. It infers that buyers at 83 are prepared to accept all sellers, absorb them, and go higher. And no, that is not what's happening. So really, I caution you guys with those words, absorption, and I know that they mean something, and they do in the right context. But in this one, it's just like what I was saying earlier about high volume nodes. We don't have enough data yet to make that assumption. Does that make sense, Summer? It's not that you're wrong. It's just that contextually, that's not what I would say is happening. At other times of the day, I might. Darren, so low volume environments are approached. Yes, particularly, Darren, this time of day. Low volume in the middle of the night, I expect, and nobody's playing games and nobody's getting ready to trade. And, the guys on the old floor times in Chicago aren't getting ready. And, So there's lots of things going on between now and the open that don't go on overnight. And so, yeah, there's a lot of manipulation, and there's a lot of people kind of positioning themselves. So it can be really deceptive this time of day. Yes, that is exactly what I meant. So I approach that suspiciously between 4 and 6 a.m. my time. So, the couple hours before the actual open. Context is not appropriate. Yes, that's exactly right, Sommer. So you have the right idea at the wrong context, and context is critical in understanding order flow. An event that looks like an overwhelming quote unquote absorption in the middle of the night might just be one guy, deciding, yeah, that short's stupid, I'm out, and taking his loss. So giant buyers can deliberately profit with a big buy at that ledge. Well, sure, it's not so much giant buyers. Again, it's just the collective. If you think of buyers as individuals, and this, again, this Foover nonsense that, there's smart money is doing this and big money is, fuck, that's such bullshit. The bottom line is that, everybody looks in their best interest. It's purely self-interest. And if we start moving up, and other people will join in, they'll say, well, I'm going to push that. And everybody gets on the same side, which is exactly why it stops so short when all those guys say, whoa, that's enough, I'm out, It's, Michael, every time of the day, they're just fighting it out. It's just that we're so less liquid here that, during the day, there could be at some point, thousands on the bids and the ask. And right now, there are price points with less than 100 or right at 100. And, think about it, somebody's trading a couple of hundred, they'll float right through those price points. So it's just, this is a dangerous time. You can make great money scalping this stuff. I won't try to do it while I'm talking to you guys, but you could easily be trading this stuff I'm explaining. With a 1 lot, your risk is low. With a 5 lot, your risk is low. So yeah, there's no reason not to try to play those breakouts, understanding that they overwhelmingly go, but also understand if they don't go, all of those guys will turn around and push it down just as fast as they pushed it up. Okay, thank you. All right, wow, we got a pretty good turnout this morning. Let's see. There's about 25 people here. All right. Anybody else? If you have any other questions, please throw them at me. It's 5:40 here, and I'm gonna. By the way, see that when the energy changes, see how obvious it is by running these two tapes. I can see blocks and individual. This is everything, and this is 20 or more. And in Jigsaw, that setting is right here. Somebody asked me where it was. Do I always use 20? No. On really high volume days, I'll bump that up to 50 or even 100. Where I really just want to see the big players. But in NQ, I use 10 and 5. Right now, it's on 5. And these meters, remember what I told you, they are showing two things. And it's the same on all of them. They are showing a minute, and in this case, 4 minutes. So it's basically consolidating all the trades over the last 1 minute and the last 4 minutes. And so I can kind of get an idea of, if people are entering versus a few minutes ago. And, this type of configuration where this meter is higher than this meter, like these two are, that indicates more buying interest. And, when that goes like that, then those guys aren't so interested anymore. It's just consolidating these numbers for me. That's all it's doing. That's a cool thing in Jigsaw. Okay, your scalp would be at the edge of the, no, not necessarily, Michael. Again, my scalp will be wherever I sense. Yeah, the best place to be short is up here where we are, but you can see we're forming another node, which means this one's likely to fill in, and then maybe this one. So again, just don't get too, don't try to make too many rules about what you're seeing. Just learn to watch it and go with it. Yeah, don't be rigid, exactly. The biggest mistake you can make. This is an art. There's no question about this. You can take Stettlemeyer's understanding of the market profile as the basis for your art, because it is. That's where we got all this stuff. He invented the idea of the value area and the market profile. But at the end of the day, executing against it is an art form. And that's where everybody gets to be their own individual. All right, I'm still not seeing anything real interesting, although I like this behavior here. This is setting up for potentially a flip into the open, which would be a great short. Notice how I'm thinking that way. What could happen? We got a 20-point up. This is a one case where the Thinkorswim equivolumes are real useful because we can see there's a lot of energy in that. So, being long from back there where that guy got long is a pretty good spot, but not now. It's a chase now. So gold's pulled back a little bit. By the way, that's a pattern in gold. Gold always gets into the teens here and then pulls back. I don't know why that is, but I've seen that forever. And, those aren't tradable patterns, but they're good little things. I have a little booklet of them in my desk that's, things to remember. Whenever I notice one of those, I write it down. And I'll throw them out there as they're important. But so, if we were like we were last night down at, in the 09s, 10s, and then we start getting up in here, generally it's a fade. Where is the question? That's where you need the order flow. Okay, I don't want to make these recordings giant, and I'm going to end up having to buy a whole bunch more storage space for recordings. So I'm going to end this one unless you guys have any specific questions in the chat, and then I'll reopen it up with the more formal session for trading the open. There's no deck for that session. I'm just going to literally talk you through what I do, and I've done a little bit of it now, but I'll repeat that part. Okay, I do not see any questions. So in that case, I'm going to stop this meeting and we'll start the other one in a few minutes. Thanks, everybody.